Hello. So, what's going on in this market? Well, I think that the first thing you need to understand is that we need to take it easy. Okay, we need to take it easy. Remember what I've been saying. You buy when everyone else is selling. Okay, that is how you make money. That is how Warren Buffett did it. I think he has like $275 billion in cash in treasuries now. He sold a position in BofA, position in Apple, right? Because that's what you do. You buy when everybody else is selling. Now, what is this channel about? This channel, I'm not selling anything again. I am here for you. I am here to explain to you what is going on. I am here to help you. Okay, how do I do that? I do that by explaining what's happening. And this is a great time right now to explain to you what's happening because quite frankly, we have a situation on our hands, right? The market is, I see everywhere saying, the market is collapsing, the crash, the economy in a recession. Again, you're not in a recession unless the government says so. And frankly, we're not anywhere near that yet. We're slowing down. That's about it. Second, you need to understand one thing that is extremely important. You got to put everything into perspective, right? And what do I mean by perspective? This is not 2008. I know I was there. Made lots of money during that time as well. This is not 2008. This is not 2020 when we have the COVID. And I was like, whoa, what the heck is going on here? Houston, we have a problem, right? This is not that. This is not 2022 when we had a rate reset, right? Where the government says, listen, Powell says, listen, I'm serious about this inflation business. I am raising rates. And I'm going to raise it 5, 6, 7 times. I say, whoa. Then you have some huge losses. There was a change. There was a change in mentality. There was something more fundamental in terms of what was going on. So that's different. Here, we don't have that. Unless at some point, but not now, unless we have some sort of a war, which I don't think so. People are not that stupid because they know what's going to happen. Or unless this thing with the national debt. Now that's a problem. But right now we're not focusing on it. We have a couple of years before we need to worry about it. So that's not what's going to happen right now, right? So all we have right now is a bunch of stocks that went way up.
Companies,
right?
There's Tesla and then
a bunch of stocks that frankly didn't
NVIDIA,
do anything.
but it's
the
overbought.
The market didn't go up.
Maybe you play with the options.
If you look
we'll
at
make
the
another
market
video.
as defined
but
by
right now, what
the
you want to
S&P
do
500,
is you want to get involved
really what
in
went
companies that are
was
small,
Apple, which obviously is taking
that no
a
one
loss
has really
now,
paid attention to.
NVIDIA,
That's
Amazon,
potential for some interesting
Microsoft,
growth. That is making money,
Facebook,
that has
Google,
not too much
the
debt,
Magnificent Seven,
and also that is dealing in a product
the other guys
that
didn't
can
do anything,
control or
didn't do
dictate
much of anything.
the
And in
value
fact,
of the
a lot
asset
them
in case
grew.
there is
I'm talking
inflation,
the
because we're going to need to live with inflation for a while.
The small cap between 300 million and $2
that's
billion
able
of
to
capitalization.
manage inflation,
the mid cap between 2 and 10. They really didn't do anything. I think if you look at the P ratio for the Russell 2000, it's 10, 11. Nothing happened. It's just these guys went up and totally out of control. I mean, they have great business model, great growth, and we're going to talk about that at some point about the AI trade, which I still believe in. There's still a trade to be done in AI, but right now they realize, you know what? I think it's enough. And as usual, the smart money is getting out. And the stupid money stood in. You say, oh, you're selling? Why? I thought NVIDIA was going to make me a millionaire. Right? Go on YouTube. Give me 10,000. I'll make you a millionaire. You're going to retire from NVIDIA. You cannot believe these things. You cannot believe things like that. It's all about hard work. It's all about waiting. It's all about concentration. It's all about patience. And it's all about understanding what it is that you're doing, that you're getting involved into. That's the most important thing. Now, what is the Fed going to do? Well, what do you think they're going to do? Do you really think that the Fed is going to lower rates now that the market is crashing? They love it. They want the market to crash. You know what? Because that push inflation further down. What? What do you mean? Well, I mean, stock go up. They go up and up and up and up. You have more and more and more and more money. Hey, you're going to buy this car. You're going to buy everything that you want, right? Because you've got lots of money. You feel rich. That pushes inflation. That pushes the inflation. They don't want that. They want the stocks to go down because that calms you down. Relax. Don't spend that much. And their job, again, the Fed's job is not to make the economy better, is not to make sure you have a job. The role of the Fed is to make sure that inflation is under control, and it's working. It's working. You may like the guy, you may not like the guy. We were at 10%, 9%, we're down to 4%. That's not bad. He's doing his job slowly but surely. Now, of course, there's a train of thought out there that he might, because he knows the Democrats can't win. I don't know if that's true, but basically wait it out, keep the rates up until we actually go into a recession. I mean, if you keep rates that high that long, you will go into a recession. Okay, but the point is, at some point, in fact, in September, the story is going to turn around to say, oh, I think it's time to lower rates. And when he does it, and when everybody looks around and cool heads will prevail, and I will show you the economy is not that bad. When they look around, they're going to say, wow, we're actually lowering rates. This is great. And stock will pick up. And they said, look, all these stuff on discounts. You see, this game, because that's all it is, this is a game of chicken and egg. Who is first? Was it chicken first or the egg first? Right? Who started this thing? Do you want to be the chicken or do you want to be the egg? All I know is you want to be the first one that sells when everybody else is buying, and you want to be the first one to buy when everybody is selling. Right now, everyone is selling. I mean, we're selling, but we're not collapsing. You're taking some profit, right? Some of the name I'm going to show you in the portfolio in a few minutes, and you're going to see that, well, take it easy. We're still making money. Okay, again, this is not 2008 when the actual system was collapsing. We were giving money to people that did not belong having money. People weren't paying their mortgages. The credit default swap markets was collapsing. Never mind if you don't know what that is. The point is that there was a market that was collapsing. People couldn't pay their mortgages. House prices actually collapsed, right? Because nobody wanted to buy anything. People were going into their banks to get the money out. We're not there. 2020, you couldn't get out of your house. You couldn't spend $1. Obviously, everything is going to go down. That's why companies like Tiffany had to be bought up, and a bunch of companies went out of business, right? But that was different in 2022. It just stuck it to you with the rates. But this is not it. This is a bunch of people that overbought some stocks. Nvidia, what? That nobody wants to do AI anymore? That's it? We're out of business? We're not doing anything? No. But be careful. Be careful. Because if you go out there, right? Listen to the news. Look at the news. Most of the news, what is it? You could see those YouTube videos which have more subscribers than I do, which I don't know why. But anyway, we're going up. We're almost at 200, and we're going to hit 300 soon. The point is that these guys are basically saying, yeah, that's right. This is bad. So obviously you want to know, what do you mean this is bad? What's going on? Look. And obviously you're panicking because you're focusing on one thing and one thing only. You gotta see both sides of the situation. You gotta see exactly what's happening. You need to understand. So, what is really going on? What do we need to worry about? What's happening in the economy? Well, look at this chart that I have for you here. U.S. manufacturing capacity is starting to rise. Look, from 2021 and 2022, we've been going up. Why? Because there's a CHIP Act, the Infrastructure Act. The government is spending money to prop up the economy, to prop up the industrial, because we were in dear need of help. Remember, they want all the chips the chips to be made in the U.S. I mean, I don't want to make a big deal out of what the government is doing and not doing, but some of the things that are happening are true. This is actually what's happening. So the capacity is on the rise. What's going on in the economy? Look at those indicators. Look. Daily data for restaurant booking. Are you still going to the restaurant? Right? You're going to the restaurant, right? Look. Flat. Okay? US travel. Take a look at 2024, which we're up here in August. We're way above the other years. Okay? You're traveling. Daily job postings. Okay, a bit of a decrease, but we're way beyond 2020. Daily withheld income tax receipts up. Let's take a look at daily gasoline prices. It's actually come down quite a bit. What else do we have? Mobility indicator. Everything is on the way up. So I don't know what the big deal is in terms of saying, you know what, we are collapsing, the world is coming to an end, and everything is happening. So let's see how we could make some money here. Let's take a look. Let us take a look at our portfolio. First of all, we're down 0.74% today, $12,000. We are still at 1.7 million still, right? So I'm not down to zero, okay? Look at what's happening with our great position, with our great SPY position. Our put is at 47% in one day. You had bought this thing on Friday, you would have made 47% today. What are you waiting for? You can make money. Now remember, at some point this thing is going to reverse, right? And obviously the other option, the options that we have on Tesla and the other guys are going to work. So what you do is take your profit if you want. I'm going to let it ride, okay, to show you what's happening. But you could as well take a profit. You can make 47% in this market. So people are making money. Do not let them fool you. Okay? So what do? We take advantage of this, and why don't we take a look at our look at this. POWL is up 0.91%. I mean, I know the other one are down, but I picked 8 stocks. One of them is up. Who are these guys? I'll show you who they are. Powell Industries. What do we have here? Well, you've got a P ratio of 14. Is that a lot? Yeah. The P ratio for the market is at 34, as you could see. Okay. What else you have for me? What I have for you? I have this for you. Look. What do they do? Well, before we wait until what do they do, when we take a look at the financials. Please show me the financials. Look. It's 500 million in revenue. I'm up to 699 million. And that's a month, I'm almost at $1 billion in revenue. Again, right? We're not talking $3 trillion in market cap here. We're talking about 1.85 billion. So there's way to grow, right? And what do we have in terms of our EBITDA? Let's see. Our EBITDA right now is at 159 million. 159 million. If I do, which I love doing, 159 million, right, divided by how many billion? 1850 million. I'm at 8.5%. That's even less than yesterday's recording that I had on Vulcan. This stock has even more. It's at 8%. Basically, it says that if you're making cash flows of about 159 million, you have 1.85 billion of market cap. So it's almost as if your dividend, kind of, right, divided by the market. So it's a kind of a dividend yield, although you're not getting cash, but it gives you a feel, right, for the ratio between one and the other. Meaning what? Well, I mean, it's like basically right now the treasury is around 4%. 4% is at 8%. 4% is risk-free rate. So that makes sense to be at 8%, right? Because you're a little more expensive than technically a dividend from the government. But when you see that Nvidia is at 1.3, you know that it's way, way down. Okay. Again, it's not dividend, it's EBITDA, but it gives you a feel for how valued it is versus the price versus market capitalization and the amount of money this company makes. So, what is it that they do? What is it that I like? Well, first of all, there's no interest expense. They don't owe any money to anyone, no debt. So, I don't care what happened to rates, right? What's the worst thing that could happen to them is, well, they make less money, right? They're not going to go bankrupt. It's not going to go to zero. Okay, so what the heck do these companies do? Powell Industries, POWL, up 0.91% today. It's up today. Well, the market is down. Keep in mind, okay? I'm here to help you here. Powell Industries, together with its design, develop, manufacture, sells. So like they're like vertically integrated. They do everything. Service, engineering, system, and equipment. Now, this is important to get involved in that kind of business because you want probably more, like I said before, it is time to look for more mundane type of business, more value business, right? Business that are needed. That if they raise prices, people will pay up for it. The company's principal product include integrated power control room, substation, custom engineering module, electrical houses. Whoa, what is this guy talking about? Well, I know. You may not know what that means, but you've got to understand what the business is. You just can't go and buy the stock if you don't understand. Take your time. I'm pointing out to you, understand, but it's basically engineering. Medium voltage circuit breakers, monitoring and control, right? They go from 480 to 38,000 volt. The company also provides field service inspection, installation, commissioning, modification, repair. What does this tell you? They're like all over. They're like this and like that. And the company has operation in the United States, Canada, the Middle East, Africa, Europe. So they're all over the place. They're diversified. They're like this, like that, and like that. It's fantastic. And they were founded in 1947. Yay amount of experience, of history. What does this company actually look like? Let's take a look at the website to see what what are we talking about? Here, look. Accept. Solving your toughest problem. Powell. Products. These are the products. Metal clad switchboard, metal enclosed switchgear, rectifier, integrated package solution, busy. Look at all 1947 they've been doing this stuff. They've been doing it forever. So they got a huge amount of experience. Service, power, let me show you what it looks like. How about that? Okay. What is a power engineering services? Front end conceptual, procedural, integration, construction. They're into constructions. Product. What is a switch type 439? That looks like this. This is technical stuff. Low voltage switch gear. Low voltage power distribution cabinet, right? The company is all over the place, and let's take a look at what they say about the investors. Do they have a presentation? Let's take a presentation. Look, July, they did a presentation, forward-looking statement. Boom, founded in 1947. Look, USA 84%, but they also have some non-US stuff. 59, who are their customers? Oil and gas and petrochemical, 59%. Electric utility, commercial, right? They're actually pretty diversified. Unleveraged balance sheet, they have no debt. Okay, so that's fantastic. They are expert in electrical distribution. I mean, you need electricity, right? Custom design, look all the stuff that they make. Market focus, voltage, all over the place. Product, standard, complex, engineer to order, custom. Customer relationship, long-term, repeat customer. Focusing on electrical distribution. Look at this stuff, how complex it is, how interesting. It's all about electric. It's got solar, it's got nuclear. switchgear solution, integrated power solution, control room, typical power room. Look, this stuff is very complex. I'm not asking you to become an engineer, but I want you to realize that you want to know there's new technology driving opportunities: hydrogen, carbon, biofuel, automation, competition. Unique is a full position, as a full line manufacturer. It's complete. You know what I was saying, right? They are fully integrated. Growing electrical automation, expanding, diversification of the product portfolio, capital allocation framework. That sounds very good, very, very good. Shareholder return, consecutive quarter dividend, 43%. They have been growing internally. Look at these financial results. Up, 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 up everywhere. It's just backlog order. They got lots of orders backing up. So basically, and look, this is a world that they're doing. So essentially, the company is exactly what you're looking for in this environment. You want something that has been overlooked. You want something that is growing. You want something that's going to pay a dividend. You want to say something that's going to grow. How has it been behaving lately? Well, it's simple. Let's take a look at the chart. Look at the chart. 2 years, 493%. 1 year, 89%. This company has shot out from 76 to 74, and it was up to 200. So this thing is ready to explode. Okay, and when I'm looking at 8% in terms of that ratio versus 5% our guy and 1.3% for Nvidia, there's room to grow. So again, what you're looking for is that you want to know exactly what you're buying. You want to understand what's happening. You want to know that what you're buying makes sense. Now, at the end of the day, what's really happening in this market as an investor? What is it that you're looking for? Well, you want to make money. You want to diversify your portfolio, but you need to know what you're getting. I mean, right now, what's happening is, my concern is right between the rotation trade, between the AI trade, between what the Fed is going to do. People are totally confused, and as usual, there are people out there they're going to help you. They're going to tell you what to do, right? Most of the outlet, most of the cable TV and CNBC and company, right? They will tend to tell you, well, look, this is bad. Well, you know it's bad, and of course you want a solution for them. You want them to tell you, what is going to happen next. But they're not going to tell you everything is going to be fine themselves. They're going to bring people coming in, because then you could sue them, right? They're going to bring people telling you, well, I think it's underweighted. Oh my God, there's the economy and the Fed. Now, the more these people talk, the more you're getting concerned, and the more it's going to weigh, the more you're going to be likely to sell. And who are you selling to? The people are going to be buying. Believe it or not, people are buying right now. You should be the one buying. You should be the one buying to hold off so that you could profit from what's happening. Again, the only issue that I'm always concerned about is what happens if we have some sort of, my biggest concern really is what we don't know. Once it's out, once the news is out, it's out, right? The market has moved already. So, it's done. You don't want to follow and say, okay, I guess I should be selling too now. It's too late. It's too late. Plus, you also need the perspective. Like I said, the perspective is the economy really, really slowing down? Nah, it's not collapsing. Okay, you just paid too much for Nvidia. So before it's too late, what you want to do is you want to be the one that's going to go in and decide whether or not it makes sense. You want to be the master of your destiny. You want to be the investor. You want to understand what's going on. You want to be all that investor is supposed to be. And an investor, again, if it's for entertainment purposes, we could do lots of charts. We could do lots of crazy stuff. We could be running like chicken without a head. But I was there in 2008. It doesn't feel like 2008. I was in 2020 with you when we were stuck in our houses. That is not the same thing. Okay, my portfolio took a hit. You see it. It just mimics a real thing. But, I mean, come on. It's not the end of the world. But because you don't really understand what's happening, then you're panicking. And more importantly, at the end of the day, this whole thing, I mean, technically this channel is for entertainment purposes, right? I'm not making recommendation, buy and sell recommendation. I am just offering you, I'm showing you an option. I'm telling you, this is what I think is happening. You could believe me or don't believe me, it doesn't matter. Now, obviously, because of my inclination to teach and to explain, having lived all this, I want to make sure that you don't make mistakes. I want to make sure that I got your back. I want to make sure that you realize what's happening. And hopefully in the process you make a couple of bucks. Now, like I said before in a couple of videos earlier, you know, even if you don't understand what's happening, I mean, this thing is all over the place. There's volatility. You should welcome volatility. You should welcome volatility because using short-dated options, you could make lots of money. You could make lots of money like Spitznagel did with his Universa hedge fund. What did he do? He hedged in the future. He hedged his portfolio. You've got to protect your portfolio. You are too focused on the gain. You're too focused on making money on the, not saying it's a wrong thing, it's just that how do you measure your return? How do you know if you made any money? Well, because how much, you know, do I have Nvidia or not? Because otherwise I lost. Because you only focus on the percent gain. The percent gain is not everything. You need to focus on how much money are you protecting? Are you protecting your book? Are you making money, or at least reducing, protecting your book when something like this happened? That's what these guys do at Universa. Read it, look at it, research it, Google it, or chat GPT it. Universa and Spitznagel in 2020. Find out what he did. You know, he made 4,000%. Why? Because while everybody is here making nice money in the stock market, he was here with his long dated puts. Now, of course, the puts that I have on SPY right now is up to December. So I made 47% today. Now, if I would have taken the SPY in 4 days, I would have made 80% in 1 day. Okay, imagine 80% in 1 day. That beats Nvidia any day for on an annual basis, right? 2,500%, that's nothing. 80 times 300 and 80 times 3 is 300 is 24, is 24,000%. It's crazy numbers, okay? So he was waiting here and he was waiting for the market to collapse. How did he know that? Well, because while everybody was talking, well, we're fine, everything is great, the economy is, well, there's this news about this bug somewhere in Asia, but there's always issue in Asia, and they walk around the mask all the time. So, but his friend that wrote the Black Swan, Taleb Nassim, wrote a paper, and he said, you know what, I was walking in the airport, and I found something a little bit scary. I found that these people were being locked out. What if it happens here? No, that would never happen here. Right? But they were the first one to sell in addition. They were the first one to be concerned. The first one to be concerned over here. And that's what you want to be. And he waited and waited and he paid. And then when the market collapsed, his position just exploded. Now, of course, he's allowed to do that because of the tight control they have over their hedge fund investors, right? They're not allowed to unwind or to cash out whenever they feel like it. They're locked in, and they say, you know, we're going to be doing some crazy stuff with the hedges, and you are locked in. Just want to let you know so there's no misunderstanding. So, but that's usually very, very unusual for them to be allowed to that. Most hedge fund managers would not be able to get engaged because they say, well, what are we paying this hedge for? We're not making any money. It doesn't make any sense. It's a waste of time. It's hard to justify. The same way it was hard to justify for Michael Burry in 2008. I remember the guy, he hedged the whole credit default swap market, and he basically said, guys, the market is going to collapse. And he was paying, I don't know, like $13 million a year in insurance, quote unquote. After 2 or 3 years, they said, listen, we're not spending any more money. This is a waste of money. I said, no, sorry, you gave me control. I have total control. The same way you could have total control. Nobody tells you what to do with your money, right? You don't have a bunch of people say, what are you doing? Don't invest in one stock. Invest in 50 stocks. No, this guy invested, and he was paying 13, and then the market collapsed in 2008, and then he went to Goldman Sachs, and he said, pay me. And we were talking 2, 3, 4, $500 million they had to pay him, to the point where they had to go to Warren Buffett, I don't know if you remember, and he got a dividend, a special dividend they paid out to Warren Buffett. I think they paid him like 12% because they needed cash from him. And remember, what does Warren Buffett does? What does he do? 2 things. He sells when everybody else is buying, right? He was selling in July, August, all his positions. Look at my previous video. And he understands what he buys. That is what you need to do. You need to be like Warren Buffett. Catch you later. And don't forget to subscribe.